Hello friends, in project management, let us see today unit 5, that is on exercise on writing of project report. Friends, we have studied the first 4 units and we can now conclude that a project report is a compilation and assimilation of all that we have discussed in the preceding 4 units of project management. It is also at times addressed as a business plan, venture plan, loan proposal and investment plan. According to Mar J. Dollinger, the business plan is a formal written expression of the entrepreneurial vision describing the strategy and operations of the proposed venture. As per Jack M. Kaplan, the term business plan means the development of a written document that spells out like a road map where you are, where you want to be and how you want to go there. Thus, a business plan or a project report can best be defined as a well thought out course of action devised to achieve the specified objective, that is, setting up of a small business enterprise within a specified period of time. Thereby, business plan, as we have studied, it is initially an operating document. A project report is a document wherein all the details obtained from technical analysis, financial analysis, profitability analysis, economic analysis, fund procurement, intermediary analysis, all together are put. Now, let us look into the significance of a project report. The significance of the project report, as we have studied, it's very important. And what are the advantages of writing a business plan? The advantages include, first, the project report acts as a blueprint or a master plan which paves the way for timely and accurate implementation of the plan. As we know, writing a business plan is especially useful for the entrepreneurs who require financial help from outside sources like banks, financial institutions and other sources of funds. The project report forecasts the future performance of the firm, thereby making it attractive enough to advance financial assistance. As we know, the business plan is like a road map. It describes the direction the enterprise is going in and its proposed goals, strategies, etc. It also enables an entrepreneur to know if he is proceeding in the right direction. Thereby, it assists in controlling the progress by acting as a point of reference. We know that a project report enables an entrepreneur to gauge the resources required for the implementation of the project well in advance. The other advantage is it also gives a general idea of his various resource requirements like raw materials, manpower, finance, infrastructure facilities and also the means for procuring them. A project report also assists in anticipating the venture's survival and profitability in the market given the clear understanding on the cost structure, competitive analysis, market growth rates, related goods and services industry. The other advantage, as we have seen by now, is the project report is an ultimate evaluation tool by providing a reference to compare the actual performance with the proposed performance. Thereby, it also serves as a tool that can lead to rectification measures. Now, that you have understood as to how a crucial project report is to an entrepreneur, let us exercise writing them. The assignment in this unit are intended to take you deep in a particular industry where you get to study many existing big players and startups. So, what you are required to do? You shall study these firms in the light of whatever has been covered hitherto in all the units of the project management, and then you can apply your learning on your fictitious venture in this industry. So, let me introduce the idea. What you are required to do? Let us assume that you are planning to start a venture in the organic foods market. You plan to start an e-commerce company dealing in organic products. You have explored a network of hundreds of organic farmers through whom you shall procure the organic produce. You plan to reach the market better by collaborating with e-commerce sites like Amazon, Flipkart, ShopClues, Big Basket, Natural Mantra, HealthCart and so on. You shall find urban India as a lucrative market, since the urban India is less price sensitive with respect to organic products. Friends, you may assume the product categories that you want to deal in the number of products, place of operation, the distribution channels, the capital in hand, investment agencies and angel investors, the market that can be domestic or international, and any other parameter that deems necessary. You are free to assume as per the requirements. So, now let us look into what are the tasks that you are required to perform. Now, let us see task 1. So, what is it? It is about designing a feasibility report for your firm. How to do that? Here are some details. The key objective is to understand the significance and relevance in deciding if a product or business idea is worth taking up further or should be let go of. As you are aware, a feasibility study is an analysis of viability of an idea. The feasibility study focuses on answering the primary question of should we proceed with the proposed project idea? Friends, an ideal feasibility study must end up answering this question. A feasible business venture is one where business will generate adequate cash flow and profits, is less risky, sustains for a long term and meets the goal of an entrepreneur. Now, what to include in the feasibility study? So, let us look into one by one. First is the market analysis. The key questions that should be answered in the market analysis section of the feasibility study are presented here. It includes 2 points. The first is market size or market potential. The question that you should address is, what is the present market size for the product? What is the market growth rate? Also, how many units can you reasonably expect to sell each month? Second point that you should look into is a sales potential. You should be able to answer what are the target markets for this product or service. Also, you should look into what demographic characteristics do this potential customers have in common. How many of them are there? After market analysis, the second you need to look into is a producer survey and supply analysis. Friends, it is very important to look into the competition scenario. So, the first point that you should focus is a competition scenario, and in that you should look into what is the projected supply in your area of the products or services needed for your project. The second thing that you should look into is about key players and the performance. You should try to look into what competition exists in this market, who are the key players and their present status. Can you establish a market for yourself and compete effectively with others providing this product or service? That should be the main focus, because production analysis is very important. The third important thing that you should focus is organization and technology analysis. What will it involve? First will be organizational capacity analysis. What should you look into? You should try to focus upon organization structure, and so the question that you need to answer is, what organizational structure is the right one for your project? The second thing is, what qualifications are needed to manage this business, and the third will be, what other staffing needs do you have? How do you expect staffing needs to change over the next 2-3 years, and the cost of staffing? You should also focus upon those aspects. The other is technology and equipment needs. Technology, friends, as we aware in the previous modules, is very important. For your project, you need to look into what are the technology needs for the proposed business. Also, you should focus upon what equipment does your proposed business need. Where will you obtain this technology and equipment? And how much will be the equipment and technology cost? These are the important points in the technological analysis. Friends, you should also look into the operational scenarios, and you should focus upon the questions like, what will be your production runs? How much do you plan to produce, procure or trade for each proposed product category? The other important thing is, you should focus upon the transportation and processing analysis. Now, when you talk about a transportation and processing analysis, producer location analysis is very important. Friends, here you need to answer the question, is the location of your proposed business or project likely to affect its success? Is your proposed site the most ideal to reach your target market efficiently and effectively? And secondly, transportation parties and cost structure. Which supply chain partners or transporting agencies will you need to make your goods reach to your target markets? The proposed expenses involved in the transportation should also be included by you while you are preparing this report. Friends, the most and the very important part of the feasibility report is a financial analysis. Financial analysis, no doubt, is covered over here, but we have a separate exercise that is included in task 2 and which we will see in task 2. The next will be the overall feasibility evaluation. After doing market analysis, operational analysis, financial analysis and all the analysis that we have discussed so far, you need to give a summary and a conclusion. So, give your final conclusions and recommendations. Also, wherever required, you should make appropriate suggestions for your project. You can also determine the future plans, that is, objectives of business and expectations for next 3 to 5 years. So, this is about the task 1. Now, as I said, The financial analysis, let us do it separately under the category of task 2, as it is also a long process as you are aware. Now, let us look into task 2, that is financial analysis. Since you are planning to start a venture in the organic food market, it is likely that capital will be required to set up a processing system for processing of procured food products and then packaging and labeling them. As we are aware, the startup capital refers to the funds needed to buy the facilities and equipments and the funds associated with the registration and certification procedures. Friends, working capital is also very important part here. Working capital includes the cost of raw material, packaging, manpower, product promotion, etc. that have to be made before the business begins to generate the profit from product sales. The startup capital and the initial working capital, they are calculated to determine whether the entrepreneur's savings will be sufficient enough to start the business without an external loan. Now, let's use one example of organic food and work out the startup cost. Friends, you know that there are two types of operating cost. Those expenses that have to be paid even if no production takes place, and those that depend on the amount of production. The former is fixed costs and the latter is variable costs respectively. You are required to work out the fixed and variable operating costs requirements for your business. You can make your own assumptions. From the market survey, you are in a position to gauge the expected sales, the gross profit or gross loss. Whatever it is for your business, it will be a difference between the expected income and the total operating cost over the first year. So, how will you calculate income? Income will be equal to selling price per unit multiplied by number of units sold, and thus the income clearly depends on both the price of the product as well as the amount sold. Thereby, there are two approaches to deciding on the product price. The first, that is, the price can be based on the production cost, ensuring the income exceeds the total cost. And the second approach is to set the price based on the comparison with the existing competitive product. It is imperative that we include the cost of distribution intermediaries like the retailers. In this case, since you are the e-commerce retailer directly selling to your end users, you are saved on any retailer based margin. In addition, there are logistics and supply chain related distribution costs and perhaps special promotion costs that should also be included. The price that is charged for the product should therefore allow all the concerned parties, the producers, the distributors and the retailers to make an adequate profit. When the production cost and income are compared using second approach, the business must be operating above the break-even point. Now, what is break-even point? This point determines the minimum level of production that can enable the enterprise to make a profit. You are required to work out estimated gross profit or loss for the first year of operation. Secondly, you have to also calculate break-even point for the business. Now, for calculating break-even point, you will have to go for 4 stages. The first is calculate the contribution for variable cost per pack. Second, will be subtract the value obtained from the sale price to obtain the unit contribution. The third is calculate the total fixed cost per year. And fourthly, divide the fixed cost that you have already covered by unit contribution to obtain the annual production rate that will allow the business to break even. If the feasibility study shows that the scale of production required to meet the expected sales potential is below the break-even point, then the business needs to carefully examine the data to see if the production cost can be reduced in any ways. If not, then there is a question raised over continuing further with the proposed business. Friends, it should be noted that entrepreneurs should not assume, consider the gross profit as their own income and deploy it for their personal expenses. The income belongs to the business and the promoters should take a fixed wage, which is recorded as a business expense. If the gross profit indicates that the proposed business is likely to be successful, it is then necessary to repeat the calculation of monthly gross profit for 1 to 3 years. This will then show whether there is a sufficient cash available to operate the business without the need for further loans, and this is known as a cash flow forecast. You are required to make cash flow estimations for the first 3 to 5 years. Also, work out for the required rate of return. In financial analysis, after estimating cash flow requirements and required return on the project, the next step is evaluation of various investment alternatives and selection of the most profitable project. A wide range of criterion have been suggested to judge the suitability and worthiness of the investment alternatives. As we discussed, discounted and non-discounted cash flow techniques in Unit 2. You are required to use those techniques and you should try to look into which technique would you use for the evaluation of worthiness of your project and why. Using selected technique, identify the worthiness of the project. You can make necessary assumptions. Also, you can use appropriate discount rate if using discounting techniques or project evaluation. Friends, similar forecast is made to show the expected development of the business over 3 years. Don't forget to take into account the expected competitor movements because that is very important for your project. Finally, in assessing financial feasibility, present a profit and loss statement to calculate the net monthly profit before tax over the first 3 years. Thus, that will end the financial analysis. The next will be task 3. Now, since you have estimated the cash flows, but as we know, estimation of exact cash flow is not possible. Why? Because of the uncertainty in the estimation of the factors that affect the cash flows. For example, supplier says that machinery's economic life is 5 years or less than 5 years. In some cases, in reality, it may extend beyond 5 years or it may come down to less than 5 years. Also, take an example of a scrap value. For estimation of cash flow, scrap value is also considered, which also may vary in reality. There can be other risks like project specific risks, competitive risk, industry specific risk, market risk international risk, and so on. Thus, incorporating risk is very important in capital budgeting. In module 3, if you remember, we have learned various conventional tools as well as statistical tools to incorporate risks in a project. For your project, friends, you need to decide technique to identify and consider risk in evaluating a project and also incorporate the same in the evaluation of a project. Now let's look into task 4. You have to take a case of startup organic food brand, Naturally Yours. It has received financial assistance from an external investment agency. Friends, Naturally Yours, you must be knowing, is one of the first online organic food brand in India, and it has raised an undisclosed seed fund from angel investor Sanjay Mehta in 2015. This move was to fuel their new plans of adding 100 new products to their existing product portfolio. As we discussed in module 4, identify the role of investment banker, merchant banks or angel investors in your business. Detail on the process of approaching such agencies. Exemplify by giving a case of any firm dealing in the organic food industry. So friends, let us summarize on what we discussed today. You need to require to perform task 1, task 2, task 3 and task 4. And from the above assignment, you are oriented towards the key steps and the modalities involved in this crucial process. Friends, by now you should be very clear that any project begins with an effective idea. You witness the role of a well thought out feasibility study and its importance in gauging the conceived idea as a potential business in future. Once the idea glides through the feasibility test, it then has to be tested for its financial soundness. The assignments acquainted you with the intricacies of using discounting and non-discounting techniques to help you to arrive at the most lucrative judgment. Another important dimension, as we learned through this assignment, is about the incorporation of the element of uncertainty in the project. By now, you will agree that techniques like discount rate, sensitivity analysis, decision tree, they are playing key in dealing with the inherent risk element. Any project requires assistance of external bodies like the investment banks, merchant banks or any funding bodies to fuel their initial ideas and subsequent expansion plan. We have understood how these organizations function, their role and the criteria involved in allocating assistance. And finally, to give everything a perspective, it is best to resort to writing a project report for a firm so as to assimilate and build on all that has been understood as a key elements to the concept